Pros and cons of owning an investment property in retirement. Now, I would think most people would think this is a positive, having an investment property or two in retirement. But I guess that only really applies if it's not got a massive mortgage on it. So if it didn't have a mortgage, then obviously you would just get a property manager and you'd get rent and you could live off the rent after tax, obviously. And then if you decided you needed more money, you could sell it for a big lump sum and then use that. So you could either sell it and get lots of money, or live off the rent and then sell it and get lots of money. So that seems like a massive good idea to aim towards. And I say to everybody that you should have at least one investment property and one home mortgage free. But what happens if it's still got a mortgage on? Well, I guess it depends on how big that mortgage is versus what other things you've got going on for you. So for example, if the mortgage is only $100,000 and the rent easily covers it, then that's probably still okay. But if the mortgage is like massive and the rent doesn't cover it, then that is probably more of a liability than an asset, and I would not aim towards that when you've stopped working, because that means you're putting your money to top up that mortgage so someone else can live there, and you've got to worry about your own house and your own rent and your own stuff. So that's the plan you do not want to have when you go into retirement.